Ladies and gentlemen, my name is FA, uh, and today we're going to talk about, this is another course on how to read price action and how to actually take trades, how to trade like a pro, right? And I'm doing this completely free. So take notes, okay? Take out your notebooks and just listen, right? This is about to be quick, but very, very insightful. So let's get started. Now, we're going to go on and start with gold. What is going on with gold? It's very simple to understand. Let me just put full screen so you guys can see what's going on. All right, let me start on the daily, okay? Whenever I want to understand where price is moving, I start on the daily time frame. So I look at the price movement on the daily time frame because if you get the bigger picture, you will understand what's going on in the smaller picture. Okay, always get the bigger picture first before you get the smaller picture. All right, so that is the type of mindset that you have to apply in order to understand how price is moving or where it's going, right? So like right here we can see gold made a higher high, okay, uh, in October, then dropped, okay, made a higher high, higher low, lower high, lower low, okay, lower high. Are you following me? Higher low. This is the change. Whenever it breaks this high, that's when everything changes. Look, it broke this high, made a new higher high, it made a new higher low, okay, it continued in this trend, and then it made a new higher low, and this higher low was broken, later broken again. Right here you can see. Then it made a new higher high, higher low. Okay, so it continued within this trend right here, within this whole trend. I don't like drawing diagonal trends like this. I don't do that anymore, because right now I have a better understanding of where price is going. I don't need this, but this is just to show you guys that it's in a bullish trend. Okay, if it's not obvious enough, right? So next thing we notice, right? It makes a new high. Whenever price makes a new high, it's going to make a higher low and it's going to want to break the last high. Whenever we're in a bullish trend, highs are being broken. Whenever we're in a bearish trend, lows are being broken. So it's very important to understand that. Lows is, I, I'm assuming like you can understand what lows are. Lows are just the low points and high is just the high points. It's very obvious to understand. I mean, easy and obvious to point out, right? So let's go into 4 hours. Now, oh wait, one daily. Boom. Now, what happened here? This higher high that it formed right after it broke this lower high, okay, that came after this higher high, okay, was broken as well. What did it do? Every time it breaks above, it wants to come back to the last high and break the most recent high. So it came back to this last high zone right here, which was an indication. Sorry for my voice. I don't have water. I haven't drink water, so excuse me for that. Yeah, so you can see right here, it came back to retest. This was an indicator, okay, that price wanted to move up. This was just a retest, came back to retest. So taking out all the buyers that bought right above here that are still in trades that didn't take their profits yet. So they took their profit, they liquidated, okay? That's all it means. It's just traders taking their money. That's all it means. That's why price comes back. Price came back, okay, got rejected when it came back 4 hours. Let's see. You see, 4 hour candle got rejected. Okay, what does that mean? It means there's a bunch of buyers here above this line, right? Beneath this line, there's sellers. Why? Because the people that bought up here, okay, are expecting they're not gonna let price drop because if price drop, they lose money. Okay, they're gonna lose money. So if you see a candle getting rejected like this, it's because there's a bunch of strong buyers here, okay, buying action, and also it's in an uptrend, so it's going back to this high, and it's gonna try to break this recent high, this new high actually, this new daily high, like I wrote right here, and it's going to go up to the other, it's going to look for the other high that it could reach, which is the highest point that gold has been to. Okay, we're going to try to break this for 4.3 thousand, right? $4,300. Okay, so I don't know what other thing that I could say. It's as simple as that. Price is going up. As you can see, I'm in a trade. 1 hour. I'm in a trade right now. Okay, let me go 15 minutes. So you can see in the 15 minutes, right? Broke above. Like the same, I apply the same knowledge when I just go with the bigger picture, then I just keep breaking it down. But I apply the same concept with every time frame that I see. So I just go lower, 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 see if it correlates with my bias on the daily, right? And right here it does correlate because it broke this recent high, right? Made a higher high, boom, lower low, higher low, lower low, higher high, higher low. You can even draw a line right here. Okay, higher like this. Boom. Higher low. Recent high has been broken. Now it's going back, or it's going to this next high. This is the next target zone. Okay. And then if it breaks this, this is the next target zone. And if it breaks this, then we keep going up, right? So it's as simple as that. Now let's go into NASDAQ. NAS 100. NAS 100, same thing, right? It's on a daily. Right now it's going back in a negative. I'm in a trade too as well. Yeah, it's gonna move, but it's gonna try to break this recent high. Same knowledge, same concept that applies to every single chart that you see, right? If you go in the 15 minutes, I mean, if you go in the 4 hour or the daily, let me actually explain the daily, right? So you guys understand better what's going on. But it's the same thing. If you understood what I said before, you'll just notice it in every single chart that you see. I choose these two pairs. Why? Because they're very volatile, and I feel like they respect um, the trends most of the time, right? More often than, let's say, forex pairs, right? That's why I go with indices. I go with futures. Now you can see price was on a downtrend, and this downtrend got broken and stopped because this recent high was broken. Recent high broken, created a new high that you can see right here, created a new high. So I take these pointy, you see these little spikes right at the top, and boom, mark that new high, created a little higher low, broken, new high again, okay, new daily high, okay, created a little low, broken again, right? Why? Because this low, instead of closing below above this high, I mean, instead of closing below this the top of this high or at this high, what it did was it closed above this high, meaning a bunch of buyers, people buying. There's a lot of buyers. There's a lot of confidence in buying NASDAQ because NASDAQ has reached a point that was very low, and there's just, people started buying back. They took their profit, now they're buying back NASDAQ. And NASDAQ is the pair that often goes up. Since we can go way back, okay? Let's say we go 1 month, right? Since a long time ago. It's just a pair that goes up. It's always on an uptrend since like 2010, 2008. You see, NASDAQ is always been going up, always been going up. It does little corrections, but at the end of the day, it's more bullish than ever. Okay, it's more bullish than bearish. I don't even think it's ever been bearish, like crazy bearish, right? So we go back in 1 hour or 4 hours, actually. Excuse me. I'm trying to make this as quick as possible so you guys get the gist. You guys just understand what's going on. Now, go here 1 hour. Let's go 15 minutes. Now, big sell off. Okay, let's see what's gonna happen. Let's see what's gonna happen. We're gonna give it some time, see what's gonna happen. But I'm still confident in my trade. Okay, it's true. I'm not risking that much, anyways. Uh huh. But as you can see, broke this line above this line. Okay, was the daily high. Daily high created a wait, go 4 hour daily high. Like I said, created a low, but that low closed above this last daily high. Okay, and then it created a new high, which the 4 hour candle closed above this daily high. Okay, it closed above it, meaning twice actually. It closed above it twice, meaning okay, there's a lot of confidence in it touching this last high that we can observe right here. Okay, from a few weeks back. So that's why I took a buy. I bought NASDAQ. Okay, putting my stop loss below this high. Now it went lower than expected, so we're gonna see how it's gonna react. But if it you know touches my stop loss, it is what it is. I'll just take another setup. But I'm still confident that it's going up. It's in buys. Okay, I'm not really tripping. I'm not panicking. I might have to just wait. I might have to take out my stop loss. So I took out my stop loss because I don't want it triggering my stop loss because I'm still confident that it's gonna go up and uh, touch my TP. So yeah, don't follow. Okay, don't follow me. Don't do what I just did. It's very risky, but it's just the experience. I have experience in the market, and I know what I'm seeing. I know what I'm doing. What I'm doing. So you know, this is not financial advice. You just do what you want to do, but if you want to do what I do, go ahead. If you want to trade your way, trade your way. But I encourage you to trade your way, okay, to find your way with the information provided. Without further ado, I would like to thank everybody for watching this video. And if you have any questions regarding trading, anything really, I'll be happy to help you. So just write a message, um, either in my just comment down below, and I'll respond to you. Thanks for watching. Have a good day. I love you guys. Bye bye.